Good afternoon. I'm Michael Kimmel, RPB's Executive Director, and we're thrilled you've been able to join us today to listen to and engage with us about RPB's groundbreaking Reform Jewish Values Fund. Before we go any further, just a few housekeeping items. This webinar is being recorded and will be posted to our website in a few days. We'll also email a link to you. Regarding your questions, thanks to those who submitted those in advance. We will address them at the end of the session, as well as those submitted during the session, which you can do by simply clicking on the Q&A button found at the bottom of your screen. This can be done anytime. Let me just start by saying the Reform Jewish Values Fund was first launched in February of 2018 to our retirement plan participants, and then later to our Reform Movement congregations in November of 2018. We will get to the details of the fund in a bit later, but I just wanted to start by letting you know that this fund is a custom, passive, global stock fund designed to track an index. And we're pleased that since the initial launch, the fund has in excess of $11 million invested in it. So, with us today, Rabbi Jonah Pesner, who's Senior Vice President of the Union for Reform Judaism and Director of the Religious Action Center of Reform Judaism, will be just providing us with some opening remarks, and we're really appreciative of him taking the time to join us today. Also with us is Ken Lassner, who's the Senior Client Relationship Manager with Aperio Group. You'll learn a little bit more about Aperio in a little while. And then, of course, that's me, Michael Kimmel, Executive Director of the RPB. So what we'll be covering today, besides the opening remarks, is I'll get into a little bit of the background and history about Jewish values investing at RPB. We'll then get into the methodology that we use to develop the fund. And then I'll go over the portfolio, the metrics, performance, and holdings. And then we'll get to your questions and answers later on. So with that, I'm going to turn it over to Rabbi Pesner. Jonah? Oh.
Okay, can you hear me now?
There you go, just unmuted you.
It's amazing power you have, Michael Kimmel, to silence a rabbi. Well done. Those of you that know Michael Kimmel will join in the laughing at that comment. Michael, there's nobody who has done, from a lay perspective, more to advance synagogue life, Reform Judaism, or Reform Movement than Michael Kimmel without the title rabbi. So thank you for that. All of your great work, Michael. Thank you to the team at the RPB. Your chair, Leonard Teitelbaum, previous chair, Darrell Messinger, and all of the great people on the board and on the staff and in the leadership of the RPB. Obviously, I speak as a Reform rabbi whose pension is, nested right there inside the RPB. This is not an academic question for me. This is deeply personal. It has to do with my own portfolio. It has to do with what I'm trying to do for my family and my legacy. As much as it is for everybody on this call, your congregations, your clergy, your professionals, and we should all be proud of the RPB, particularly because not only has the RPB stewarded the incredible sacred task of making sure that our people are provided for and supported in the way that our community wants to be reflected in its values, but now in taking this step towards the Values Fund, which I proudly say that I am an investor in, we live out our values not only in terms of supporting our clergy, our professionals, and our leaders financially, and making sure that they are provided for in their later years, but also to make sure that our funds, our investments, reflect our values as well. This is not a new thing, though the Values Fund may itself be a new initiative. And again, thank you to Michael and your team for guiding the process of the movement to getting to this place, which I think is a really important and sacred milestone. I asked Michael to put up this slide of the Pittsburgh platform, which is, obviously more than 100 years old. You could do the math. There's better math whizzes than me. That is rooted in the prophets, which are thousands of years old, but really reflects some of the core principles of Reform Judaism. So I'm going to read it out loud and let the words resonate. This was, these early Reform rabbis who were articulating what their vision was for the world. They believed that in full accordance with the spirit of the Mosaic legislation, which for those who don't know your classical Reform Judaism history, that was their euphemism for the Torah. They didn't want to be too Jewish, so they called it Mosaic legislation, i.e. the law handed from Moses, from God to Moses, so the Torah. So I'll reread it as in full accordance with the spirit of the Torah, which strives to regulate the relations between rich and poor, we deem it our duty to participate in the great task of modern times, to solve, on the basis of justice and righteousness, the problems presented by the contrasts and the evils of the present organization of society. This was 1885. So for nearly 150 years, Reform leaders, rabbis, but all Reform Jewish leaders, articulated a vision inspired by the Torah and by the prophets that our work as Jews is to close the gap between the rich and poor, is to lift up the widow, the orphan, the stranger, the most vulnerable, is to make sure that what they called the evils of the present organization of society are remediated, that we actually make life better for all people, but paying attention to this gap between the rich and the poor. So how do we do that in modernity? Well, here at the Religious Action Center of Reform Judaism, we're fighting for tons of policies and legislation on a state level, on a federal level, even in local communities, to make sure that we bring about equity, racial justice, full equality, equal opportunity, regardless of folks being from LGBT community, from communities of color, women, people with disabilities, and the list goes on and on and on. We try and combat bigotry, anti-Semitism, racism in all forms. But one way we can do this work is to actually lead with our investments and to pay attention, both to make sure that we're not investing in things that don't reflect our values, but that we are proactively and positively investing in those strategies that will help make the world better and reach this vision of Tikkun Olam. Last thing I'll just say before I kick it back to Michael, in this era of BDS and this terrible strategy that those who would delegitimize the state of Israel through the BDS, boycott, divestment sanctions, one of the things that Daryl Messinger and I have often talked about is a way to proactively help people invest. What are you for? What are you trying to promote? How do you encourage investment, whether it's in Israel or in companies in the US, or whatever investments that will proactively help you realize your vision for a more just world. So I'm so proud to be an ally of the RPB. I'm proud to be an investor in the RPB, and I'm proud of the RPB for showing us how to live out our values through our investments. Michael, thank you for the opportunity.
Jonah, thank you very much and appreciate the kind words. It's been my distinct honor and privilege of serving the professionals of the Reform movement, as well as the entire movement, through the work we do here at the RPB and my prior work prior to me joining the RPB. So thank you, Jonah. So now I'm going to get into a little bit of the history of Jewish values investing and socially responsible investing at the RPB. This is just a very high-level timeline of our socially responsible history. The RJV Fund is, in fact, an outgrowth of over 30 years of integrating SRI, what we call Jewish Values Investing, in our investment management process. From joining in the South Africa divestment movement back in the 1980s, to adopting URJ's CHIP program, which called for community-based investments in the late 90s, to more recently officially adopting a Jewish values investing policy in 2014, and then, of course, the launch of the RJV Fund in 2018, RPB has continued on its socially responsible investing journey, and we are certainly not done. This next slide really is a graphical representation of our Jewish investing policy. Really, we stand on 5 pillars. First, it's our manager selection and evaluation. And this involves how we review the investment managers and how they integrate ESG, or environmental, social, and governance factors, into their investment analysis and portfolio ownership practices. That's an overarching strategy we employ for all our investments where we can. Investment screens. We use positive and negative screens to filter companies that do or don't align with our values investing criteria, and we'll get to those criteria in a little bit. We try to influence companies through the use of proxy voting and shareholder engagement to influence firms' decision-making where we do own the shares. We also provide support for Israel and make investments that positively impact Israel, its economy, its people. We do that through the Jewish Values Investing Fund, or our Reform Jewish Values Fund, I should say, as well as separately, the RPB does own a stake in some Israel bonds. And then lastly, community investing. And this, I mentioned the CHIP program earlier. This is where we provide support through investments with small businesses and affordable housing through CDs and community development agency bonds. Now, I'll turn to the actual fund. First, I want to talk a little bit about the methodology, and Ken Lassner from Aperio will be joining me in the discussion. The first thing we did was to develop the fund is that we formed, at the direction of our board chair, Len Teitelbaum, a values task force. It was comprised of representatives from the Reform Pension Board itself, the CCAR, Central Conference of American Rabbis, the URJ, as well as the CSA, or the Commission on Social Action of Reform Judaism. You can see the names on the list. Rabbi Howard Shapiro, who is from our board, was the chair. Isabel Dunst, who is currently the chair of the Commission on Social Action. It's Rabbi Stacy Offner, a past past board member of the RPB and also very involved with our history. Rabbi Bruce Raff. Of course, we all know Rabbi David Saperstein and his many, many decades of social justice work for the movement and beyond. Rabbi Martin Wiener, and then myself and Len Teitelbaum rounded out the members of the task force. Next, we're going to get into some more details, but let me turn it over to Ken Lassner from Aperio Group, who is the firm we partner with to build the fund, and to let him introduce himself, Aperio, and then Ken will also get into the methodology that we employed to actually construct the fund. Ken?
Great. Thank you, Michael. Thank you, Rabbi Pessner. And thank you, everybody, for taking some time to learn about the fund. It's been just a fantastic experience from my side, from Aperio's side, a lot of people involved in putting this together over the probably 1 year that we spent putting something together for the RPB. So we're thrilled that we've seen success over the past year with the fund has been live. As Michael said, RPB and Aperio really kind of sought each other out to create this Jewish values-aligned fund. We at Aperio manage, as you can see on this slide, this is actually as of year end, about 25 billion. So I think we're almost 28 billion now with the rebound in the markets in individually managed accounts, sometimes called separately managed accounts. So you can see that we manage over 5,000 accounts. And we really serve both the taxable ultra high net worth space along with endowment and foundations. And we work with, as you can see there, almost 1,100 accounts that are seeking to have customized passive strategies that align with their values. And we refer to this as values-aligned investing. As Michael mentioned, we're a passive manager, which means we tend to be oriented towards an indexing approach, which has a lot of advantages in that we're not looking to necessarily seek to pick stocks that we think are going to outperform the benchmarks, but we're going to seek to get that benchmark return, which is on the whole pretty good. And we don't, in terms of the screening for ESG, for environmental, social, and governance factors, we don't necessarily do that research in-house, but we do plenty of research on external data providers. And that's what we use to manage this portfolio. And I'll get into some of the tools that we use, but some of the data providers are folks like ISS, Institutional Shareholder Services, Vigio Iris, which is a firm out in Europe, MSCI, which you might be familiar with, Bloomberg, which you probably are familiar with. And finally, for this fund, for the Israel data, we have partnered with a company called Blue Star Indexes, which provides that type of screening, which I'll get into in a minute. Okay, Michael, you can go to the next slide. So on this page, you'll see the tools that Aperio Group uses for aligning portfolios to clients' values. And one of the things to note here is that everybody's values are different. So I mentioned before that both Apereo and RPB kind of sought each other out. RPB was obviously looking for somebody to manage something that's highly customized, and Apereo was looking for somebody to partner with to kind of define what it means to have a Jewish values portfolio, and in this case, Reform Jewish values. We had other faiths on our menu, if you will. So we are just thrilled to be able to work with RPB on the Jewish portfolio. So these are the tools that we have incorporated, and Michael's going to go through some of the specific screens, but we really have three main tools to align portfolios to an organization's values, and that is through exclusions, tilts, and activism. The exclusions are just as they say. We can exclude companies based upon the line of business that they're in, the industry, or even on a company-specific level. We can tilt the portfolio towards companies that are more closely aligned with an organization's values. And we do that using something that we call social scoring. So basically, companies that rate higher on the social scores according to the profile that we've created get a higher weight in the portfolio. And companies that have a lower score get a lower weight, thus giving the overall portfolio a higher degree of alignment with somebody's social values, in this case, Jewish social values. And then finally, shareholder activism is a way to kind of vote shares in a very socially responsible way. So that's a complement to owning the shares in this portfolio. And as Michael mentioned, we also give clients the opportunity for engaging with companies. So not only just voting, but actually sponsoring shareholder resolutions. And I'll talk a little bit about how we do that. You can go on. Okay, turn to the next page, Michael. There you go. So this is an outline of the process that we used over that period that I said we spent working with the RPB and the Values Committee, and then finally the Investment Committee of RPB to construct both a Jewish values social profile and finally the portfolio that best matched that profile. So we conducted what we call a social conversation. And that social conversation both interpreted and mapped the existing resolutions that already were in place by all the various organizations under the RPB to the environment.
Ken, sorry to interrupt. And no, I just wanted to interject about the resolutions. So the resolutions, yes, highlight that. Thank you for bringing that up. Really, those are the resolutions from the CCAR, the URJ, and the Commission on Social Action. Over 100 years of resolutions were analyzed by Apereo to determine what are investable decisions that can be made by those resolutions. But it's important, I wanted everyone to understand that this is really the compendium, the body of resolutions of the movement through our history.
Exactly. And those mapped to the existing data that we have on environmental, social, and governance criteria. Not all issue areas were able to lead to an investable decision, but the ones that we interpreted that could be mapped back to the data were all included. So this resulted in kind of what you might call a values policy statement, which we here call the RPB social profile. Then we used that social profile to identify which companies to exclude, as I mentioned, or tilt towards or emphasize and de-emphasize in terms of the weighting. We then constructed a portfolio for the fund, which invests in stocks of large and mid-sized companies throughout all major regions in the world, based upon these unique values. This portfolio tracks a global benchmark, and that strategy and its risk characteristics, which I'll talk about in a minute, were reviewed by the investment committee of the RPB and approved by the board. Going forward, certainly we're a year into the strategy now, so we periodically review the portfolio to ensure that the fund continues to meet the existing social profile. And as new resolutions get passed or others become obsolete, we will, of course, be in contact with Michael and the folks at RPB to make any changes that need to be made in terms of the portfolio and their screening. I think now Michael's going to take a closer look at the issue areas that are incorporated into the fund's portfolio.
Thank you, Ken. So as you can see, really what you see on the screen is a result of our work. First, the column on the left shows the issue areas that are the basis for exclusions, and the right columns are the issue areas that led us to emphasizing or tilting toward companies based on these issue areas. So in the exclusion column, for many years, we've excluded tobacco companies and also companies operating in Sudan where possible in our investments. And then through the process with Aperio, we developed the additional exclusions you see here on the screen. These screens are now deployed in all our investments where possible, not just in the RJV fund. And I say where possible because we can't exclude companies or screen out companies unless we own the stocks or the shares of companies or have the potential. Some of our investments outside of the RJV fund, we own mutual funds, and where we can't make those kinds of decisions, but where we do have separately managed accounts, we do have that opportunity. In the positive tilts column, we tilt towards companies, like I said, or overweight companies relative to the benchmark with good practices and policies. The social portion of the RPB profile prefers companies with relatively strong accountability of board members for human rights policies and disclosure, respect for labor, support for historically marginalized persons, including women, minorities, the LGBTQ community, as well as companies that conduct stem cell research. The environmental tilts of the RPB profile emphasizes companies with relatively strong board accountability for environmental and climate policies and disclosure, as well as better records on certain aspects of corporate environmental performance and potential liability. And then, of course, Israel. We also emphasized the Israeli domiciled companies, as well as non-Israeli companies doing business in Israel. So this is a very quick summary of all of our negative tilts or exclusions and positive tilts where we, like I said, emphasized these issue areas. Just looking a little bit more closely at our exclusions, we just wanted to show you for these areas the sum of the market cap and the number of companies that actually fall into these various categories that are in ACWI. By the way, ACWI, which stands for All Cap World Index, is a global stock benchmark, and that's the benchmark we track. So of ACWI, the companies that we exclude represent 2.25% market cap of ACWI, and really only 58 companies out of over 2,700 companies. So it's a very small portion, but it does make an impact on our portfolio. Now, what is the ultimate result of the social score and the tilts? First of all, we targeted a higher social score than the MSCI ACWI by doing all the things we talked about, and it resulted in the following. We're 40% higher on our social score than ACWI. Our Israel exposure is 2 times higher. Our clean technology solutions exposure, which are companies that are in the clean tech space, their business involves clean technology. Not that they use clean technology, but they manufacture clean technology. We're 2.5 times higher. And where our portfolio is 80% lower as it relates to the carbon footprint of those companies. Digging into this a little bit more, this represents a little bit more data like I talked about. So overall, our custom profile social score was 80 versus the benchmark of 57. 298 companies in our fund versus 2,757 in ACWI, and this is as of the end of January. On clean tech, you could see we were 10 versus a 4, and we own 96 companies out of the 298 in total that have some clean tech exposure. Of course, there were only 660 companies in ACWI that actually met that criteria as well. For low carbon, you could see we're scored very well. Our overall carbon emissions and carbon intensity are much, much lower than ACWI. And then, of course, finally, and very importantly to us, is Israel, where we are twice as weighted on Israel as ACWI is. Now, I'm going to turn it back over to Ken for just a minute to talk a little bit more about Israel and Blue Star.
Thank you, Michael. Yeah, so Blue Star is the third-party data provider that we use for both the fund and for other strategies at Apereo to tilt portfolios towards companies that are doing significant business in Israel. They've been around for a number of years. They were founded in 2012 with a vision to facilitate a broad-based investment in Israeli equities and fixed income. They actually maintain a family of 8 Israel indexes and 5 global equity indexes with 2 listed ETFs and 8 listed Israeli registered funds tracking them. So you could actually buy an Israeli ETF that uses the Blue Star data. So they do extensive research on the Israeli economy and global equities, including a widely read Israel Equity Outlook. So they really have developed the first and only Israeli exposure universe, which is what Apereo uses in this tilt for this portfolio. One thing that's important to mention when you're thinking about this Israeli tilt in the portfolio, when Blue Star looks at the universe and does research on which companies to categorize as either Israeli or companies that have either a major presence or a material presence in Israel, it is don't think about it as the impact that Israel has on the company, but think about it as the impact that the company has on Israel, and that's the kind of thing that they're looking to do. So you can see from this chart here that we actually have 4 pure Israeli companies in the portfolio, and there's a couple of names that you can see there. This is out of the 147 companies that are identified. 79 that have a major presence in Israel, companies like Microsoft, J&J, and Apple, and then 64 companies that have a material presence in Israel. Moving on to the next slide, which discusses another way to work with companies, and that's the shareholder engagement and proxy voting. As I mentioned before, all of our clients that are participating in their values alignment, including the RJV fund, is participating in proxy voting through Institutional Shareholder Services, which is really a leader in proxy voting for socially responsible causes. They do a lot of research. You've probably read about them. They're always coming out with opinions on companies in terms of their proxies. And then also, our clients have the opportunity to engage with companies and actually file resolutions. So RPB can join those initiatives that promote, try to promote change in corporate practices through the relationship that Apereo has with a non-for-profit called As You Sow.
Thank you, Ken.
And I'll turn it back to Michael.
Thanks, Ken. And then just to add on the shareholder engagement side, RPB also separately and for decades now has been a member of an organization called the Interfaith Center for Corporate Responsibility, which is a shareholder engagement faith-based organization. And so we've been actively involved with them for many years and have the opportunity as well to engage with shareholders. All right, so now we're going to turn the subject a little bit and focus on the fund and a little bit more about the performance and the metrics as well as the holdings. So here you could see our return, net of investment management fee returns versus our benchmark over the time periods you see on the screen through January 31st. You could see for the 1-month period in January, you're all probably aware that the markets have done quite well. For the month of January, they bounced back after the issues that happened late last year, and we subtly outperformed the benchmark. Over the 1-year period, we also outperformed the benchmark as well as inception to date by about 80 basis points. We'll talk a little bit more about what we think we expect, considering it's designed to track the benchmark. But also, just for historical purposes, and again, past results are not any prediction of future results, but the ACWI over the last 10 years annualized has returned approximately 11.3%, just for some perspective. Now, in terms of our metrics, I think I mentioned a little while ago, we own, again, as of January, 298 companies out of the universe of 2,756. We have currently 11.3 million under management, and that's both participant and non-participant accounts. Dividend yield is pretty much in line with the benchmark. Standard deviation, which is a measure of volatility, is also, or risk in the portfolio, is subtly better, which is good. A higher standard deviation, the better. Beta, which is strictly a measure of volatility, is exactly and will always exactly track the benchmark. And then tracking error. Tracking error is really, and we'll actually, our next slide gets into a little bit more about tracking error. But the other thing you could see here is that because of the nature of the companies we screened out, as well as the companies that we overweighted, we end up with a slightly higher average market capitalization weighting than the benchmark. Now, tracking error. Tracking error, we're at 1.25% against the benchmark. The benchmark will always be 0. And what does tracking error tell you? It really represents a range of the typical differences in return between the portfolio, which is the RJV fund, and its benchmark. And it really can give you an idea of understanding the deviation from the benchmark. And as you can see at the bottom, the returns, again, are expected, no guarantees, to be plus or minus approximately 2.5% of the benchmark about 90% of the time. There are always going to be some times where it will overperform and or underperform the benchmark. But you can see that, again, if we go back a couple of slides, since inception, we're really tracking ahead about 80 basis points, which is just under 1%. Okay, now in terms of our asset allocation, it's a globally diversified fund. We have close to 33% in international developed, about 56% US stocks, and about 11.2% in emerging market stocks. And here you could see the equity sector allocation based on industry, the fund versus ACWI. And what you could see here is where the weighting happens, the over and under weighting, the exclusions as well as the tilts are happening. Energy, IT, so energy we're underweight, IT we're overweight, and utilities were certainly underweight. And also materials were subtly underweight as well relative to the benchmark. And that's not surprising given the understanding of what these kinds of companies do. Those that are more fuel intensive, obviously we're underweighting. And of course, when you underweight some companies, you kind of have to overweight other companies to make up for that. And this is really the result of that. Regionally, you could see the distribution. We're in the Americas, 62%, Europe, Pacific Rim, and a little bit in Middle East Africa. I don't have the exact figure, but we talked about Israel earlier. Israel is a very, very small portion of ACWI. So even though we're twice as weighted on Israel as ACWI is, it still represents a very, very small percentage of the portfolio. And then, of course, you could see the top 10 holdings: Microsoft, a tech company, J&J, pharmaceutical, Apple Tech, et cetera, et cetera. So this is really just a summary of our holdings. All of this information actually can be found on our quarterly fact sheets from our website. And of course, if you have particular questions on any of this, we can certainly talk about that at any time. Now, reporting and rebalancing. So on a monthly basis, we update our custom funds. We provide an update on our website on the returns and performance of our custom funds, which the RJV fund is one of. You, however, if you happen to open an account with us, can log onto your account and check your holdings. I'm sorry, check not the holdings, but the performance every day. You can see the value updated daily, as well as you can download transactions, et cetera, all you want. Statements are updated as well on a quarterly basis. And on an annual basis, we also do another updating of social scores. And I'm going to let Ken talk for just a minute about that.
Yeah, so as Michael said, we actually update the social scores for each company in our investable universe on an annual basis. That's when we do our sort of global data update. So although the behavior of companies might change, quicker than on an annual basis, we're actually doing the update annually. So, and that annual update will say, well, this company or that company performs better in certain categories or worse in certain categories. We're going to be seeing that data annually, and it will be reflected once that, that next trading period. And we typically rebalance these accounts actually on a quarterly basis so that we keep it in line with the social criteria that we have in place.
Great. Thank you, Ken. So before I wrap up, I just want to remind everybody that if you have any questions, please log them through the Q&A button at the bottom of your screen. I do have a few that came in before the call, but please feel free to throw them our way and we'll try to address them. So just to wrap up, summary, first of all, our fees. You could see that our investment management fee is 15 basis points. And actually, now that we've crossed the $10 million threshold in assets under management, incrementally, those fees drop to 10 basis points. So we're just under 15 basis points now, and that will change over time as our portfolio and assets under management with the fund grows. In addition to that, we have our administrative and other fees representing 27 basis points for a total of about 42 basis points. And which, if you actually look at our fees relative, all-in fees relative to what a typical SRI fund it costs on the street, this is actually a very, very low-cost fund, especially for one that's a separately managed account where we get the vote the proxies. Most of the time, if you buy an SRI fund, they're a mutual fund where you don't get to actually vote. This is really unique in that respect that we get to do that. We have a very low minimum investment of $18,000. If you're interested in signing up and investing with us, our agreement and more information is on our website at rpb.org/invest. And of course, as I mentioned, once you're set up, you'll have an account and all the information will be accessible through Info Express, which is our online access to our record keeper site where all our account information is housed. And then, of course, if you have any questions at all after this, this webinar, please don't hesitate to contact me, Michael Kimmel. There's our main line and my email address. And I very much look forward to answering all your questions. Now with that, I have a few questions that have come in and I will attempt to question them. And Ken, I may ask you to answer them to the extent that I can. So, and I think this very first question might be something that I am not sure I'll be able to answer directly, but hopefully you can. Have you made a correction for tech bias relative to the index associated with SRI investing? Cam, what do you think?
Sure. Yeah. So for the most part, we don't really make corrections in kind of artificially in the portfolio because we actually rely on what's called an optimizer. And the main goal of that optimizer is to keep the portfolio's risks, if you will, or investment factors, if you will, very close as possible to the index while incorporating the exclusions and positive tilting that I spoke about earlier. So because of all of that is going on in the portfolio, needing to have a higher weight towards companies that do a lot of business in Israel, companies that have clean technology solutions, have a lower carbon footprint. The optimizer is weighing all of these different constraints, if you will, and then coming out with the most optimal portfolio that it can possibly come up with, and as close to the index as possible. And that's what Michael was talking about with the tracking error. The ultimate guide is how low that tracking error could go. So there's no real need to make any corrections for this portfolio because it's kind of self-correcting using the optimization process.
Great, thank you, Ken. Next question. Can you share the stated objectives for the funds meant for congregational investment? Well, I think we might have already addressed that question. The objective is to track the benchmark. Financial objective is to track the benchmark, which is ACWI, a global stock fund. And our expectation is that it won't dramatically under or overperform that benchmark over longer periods of time. And then, of course, our socially responsible objectives we've got into at some length already. So hopefully whoever asked that question, that did or does answer the question. Next question. What loss of revenue may one expect from choosing the RPB's Values Fund? So I know that there's been, in the press, there's been a lot of talk over long periods of time, quite frankly, about socially responsible investing funds and their ability to perform. That some believe that by virtue of investing in an SRI fund that you're going to underperform. Some believe, in fact, that you might actually overperform over longer periods of time because you're excluding companies that may be more prone to what's known as headline risk of litigation or bad press because of some of their poor practices. So in some ways, eliminating or getting out of those companies is a good thing. But there are some companies that, quite frankly, do some quote unquote bad companies that do quite well from their investment returns. In our case, again, because it's a passive fund designed to track the benchmark over longer periods of time, we don't expect any dramatic loss or gains in revenue relative to its benchmark. Again, I hope that answers that person's question. Okay. Our congregation, excuse me, has an explicit investment policy that directs us to use stock and bond funds based on major market indexes, based on minimizing risk and maximizing returns. Why would we change this policy? Okay, so let me try to answer the last question first. We would never suggest changing your investment policy. Many institutions, RPB itself, for its own reserve funds, has an investment policy that does create some guardrails in terms of the kinds of investments we own and how much stocks and bonds, et cetera. As we talked about, this is a global stock fund. So to the degree that your policy calls for an allocation to global stocks, this could fit in quite nicely into that slice. And we're certainly also not suggesting that you send us all your money and only invest your money with us. This should be for a portion of your money where it makes the most sense. Okay, next question. In practice, aren't values-based investment decisions idiosyncratic? Who decides what is aligned with our values? Marijuana, but not tobacco. Apple, but not Exxon. So yes, values-based investment decisions are to a certain degree idiosyncratic. In terms of who decides, we really try to the best of our ability to be as objective as possible and use the reform movement resolutions to guide us in terms of what we excluded and what we tilted towards. I can't say it was a perfect exercise, but it was a really, really good exercise to try to interpret all of what was written over all of that period of time and turn that into investable decisions. And of course, as new resolutions come to light and we can make an investable decision based on it, we will. So we will continue to think those through. Okay, how do we ensure these funds don't become instruments of political activism? For example, shareholder meeting disruptions, public boycotts, etc. It's a fair question. We certainly, there are the things that we care about, and those are certainly reflected through our proxy voting, where we'll just cast an electronic ballot for or against a particular shareholder resolution. I don't envision that this would lead to necessarily meeting disruptions or things like that. It's not like we actually attend meetings, but as you sow, they're involved with shareholder activism. But again, it's more of a participate in resolutions or shareholder resolutions rather than necessarily going to that next level of political activism. So we get involved to the degree we can, but we certainly reserve the more, let's say, active political activism for our folks, our friends down at the RAC and our Commission on Social Action. Okay, I see a couple of other questions that have come in. One question came in regarding returns and the reporting of them. And are they after all fees? No, they're not after our administrative fees. So the returns are after investment management fee. They are not after our administrative fees. Let's see, I don't see any other questions. I see a person has raised their hand to talk. If that person can maybe just click on the Q&A button, ask their question, and I can read it out to the group, that would be great. And we'll just give that person a minute to do so. And we definitely have a couple of more minutes, so I'm happy to try to address those other questions as they come in. I don't see any others. Okay. Well, I'll give you a little bit of time back on your day. I hope this has been helpful and informative in helping you make a decision around your congregation's investment with our Reformed Jewish Values Fund. Please feel free to call me, email me, and we could set up a time to talk. I want to thank Ken Lassner from Aperio and Rabbi Jonah Pesner from the RAC for helping participate and make this hopefully an engaging webinar for you all. And have a great rest of your day. Thanks so much. Bye-bye.
Thank you, everyone.